Now, okay, so that is the second elimination entry, no? Recognition of the uh, interest of the non-controlling group. And the third elimination entry is the recognition of the non-controlling interest in the subsidiaries' net income for the year 2017, no? 2017, not 2013, 2017. So in this illustration, we are seeing three elimination entries, okay, that will be appearing only on the working paper. These three elimination entries will not be recorded by the parent. These three elimination entries will not be recorded by the subsidiary or the acquiree. So we expect to see the working paper for the consolidation financial statements. This will show us the uh, how the consolidated statement of comprehensive income was computed. How was the statement of retained earnings computed? How was the consolidated statement of financial position uh, computed? No? So Kate will be discussing to us the highlights of the working paper elimination entries before seeing the final consolidated financial statements consisting of the consolidated statement of comprehensive income, wherein the consolidated retained earnings is also presented before the presentation of the consolidated statement of financial position. Okay. Okay, Kat, you may continue your presentation.
Sir, last na po yung magpe-present.
Ah,
Wala.
ano ka mo?
Lahat na po. Yung part
Ah,
ko po.
okay.
Tapos na po si Ket kagabi.
Okay.
Visible na po ba yung share screen ko?
It's possible you make it 140 magnification if it is possible.
150 na po
100.
to, sir.
Oh, talaga? Oo. 150 na yan.
Apo. Start na po ako?
Hanggang dyan na lang ba yan? Yung 150 niya. Hanggang dyan na lang yan.
Hindi naman po. Ay,
Yan. Okay yata yan eh. Now, you are showing us the working paper. So, ano yung magnification na yan? Ano na yan?
200 po.
200. Oo. Okay, sige. Let us try your 200.
Illustration 15-3, Pitt Corporation and Subsidiary, Working Paper for Consolidation Financial Statements, year ended December 31, 2017. Statement of CI, Sales, Pitt Corporation 400,000, SAKE Corporation 200,000, with consolidated amount of 600,000. Dividend income, Pitt Corporation 24,000. Kaya po siya naging 24,000 kasi po ay meron pong 30,000 na dividend declared, denimes po yung 30,000 sa 80%, nakuha po yung 24,000. Debit 24,000, so pinag-minus po yung 24,000 sa dividend income po ni Pitt Corporation na 24,000, kaya po wala pong consolidated amount. Total revenue, Pitt Corporation 424,000, SAKE Corporation 200,000, with consolidated amount of 600,000. Cost of goods sold, Pitt Corporation 170,000, SAKE Corporation 115,000, with a consolidated amount of 285,000. Operating expenses, Pitt Corporation 50,000, SAKE Corporation 20,000, with a consolidated amount of 70,000. Other expenses, Pitt Corporation 40,000, SAKE Corporation 15,000, with a consolidated amount of 55,000. Total costs and expenses, Pitt Corporation 260,000, SAKE Corporation 150,000, with a consolidated amount of 410,000. Net or consolidated income, Pitt Corporation 164,000, SAKE Corporation 50,000, with a consolidated amount of 190,000. NCI in CI of subsidiary, debit 10,000. Pag po nilagay na siya sa consolidated column, magiging negative 10,000 na po siya. Comprehensive income to retained earnings, Pitt Corporation 164,000, SAKE Corporation 50,000, with a consolidated amount of 80,000. 190,000 po, may minus po yung 10%, kaya nakuha po yung 10% dahil yung 50,000 po na net income for the year 2013, or sabi niyo po kanina 2017 po pala, times po 20%. Kaya po nakuha yung 10%, ay 10,000 na NCI. So, 190,000 minus 10,000, makukuha niyo po yung 180,000 na comprehensive income to retained earnings. Statement of retained earnings January 1, Pitt Corporation 300,000 with a consolidated amount of 300,000. SAKE Corporation 100,000, debit 100,000. CI from above, Pitt Corporation 164,000, SAKE Corporation 50,000 with a consolidated amount of 180,000. Total, Pitt Corporation 464,000, SAKE Corporation 150,000 with a consolidated amount of 480,000. Dividends declared, Pitt Corporation 60,000 with a consolidated amount of 60,000, SAKE Corporation 30,000, credit 30,000, retained earnings December 31 to SFP. Pitt Corporation 404,000, SAKE Corporation 120,000 with a consolidated amount of 420. Statement of FP, cash, Pitt Corporation 264,000, SAKE Corporation 75,000 with a consolidated amount of 339,000. Accounts receivable, Pitt Corporation 75,000, SAKE Corporation 50,000 with a consolidated amount of 125,000. Inventory, Pitt Corporation 100,000, SAKE Corporation 75,000 with a consolidated amount of 175,000. Property and equipment, Pitt Corporation 525,000, SAKE Corporation 320,000 with a consolidated amount of 845,000. Investment in SAKE Corporation, Pitt Corporation 240,000, credit 240,000. Total assets, Pitt Corporation 1,204,000, SAIC Corporation 520,000 with a consolidated amount of 1,484,000. Accounts payable, PIT Corporation 100,000, SAIC Corporation 100,000 with a consolidated amount of 200,000. Bonds payable 200,000. Bonds payable PIT Corporation 200,000, SAIC Corporation 100,000 with a consolidated amount of 300,000. Common stock PIT Corporation 500,000 with a consolidated amount of 500,000. SAIC Corporation 200,000 debit 200,000. Retained earnings from above PIT Corporation for 404,000. SAIC Corporation 120,000 with a consolidated amount of 420,000. Credit 60,000. NCI credit 60,000 and 10,000 debit 6,000. So nakuha po yung 60,000 at yung 10,000 dito po. Ito po yung sa 60,000 and ito po yung sa 10,000. Yung 6,000 po is siya yung dito po. So 60,000 plus 10,000 is 70,000 minus 6,000. Kaya po nakuha yung NCI na 64,000. Total liabilities and equity, PIT Corporation 1,204,000, SAIC Corporation 520,000, debit 340,000, credit 340,000 with a consolidated amount of 1,484,000. Number 5. Sir, kita pa rin, ayun lang po. Sir, nakikita po ba? Ay, nababasa pa po ba?
Ang alin? Yung working paper?
Apo, dito na po. Nababasa po ba?
Okay. Tanggalin mo na yung working paper. Ang gusto lang namin malaman
Paano po? Okay po.
Kung anong laman yung i-discuss sa number 5, ano?
NCI.
Okay.
Number 5, the NCI of 64,000 in the working paper can be verified by the following computations. Net assets at book value January 2 to 2017 S company 300,000. Nakuha po siya dito. Ito po, yung book value na 300,000. So, it is in earnings 2017, net income 50,000, dividend income 30,000, 50,000 minus 30,000, nagiging 20,000 na po yung dividend paid. Net asset at fair value December 31, 2017 S company 320,000. Para po makuha yung NCI na 64,000, yung 320,000 po ay tinimes sa 20%. Number 6, the consolidated CI of 190,000 in a working paper can be proven by the following computations. PIT Corporation CI 164,000, SAIC Corporation CI 50,000, dividend income negative 24,000. The consolidated comprehensive income is 190,000. The CI carried forward to the consolidated retained earnings is the CI attributable to parent 190,000 minus 10,000. The consolidated retained earnings of 420,000 may also be verified by the following computation. PIT company retained earnings December 31, 404,000. PIT's share in net increase in SAIC's retained earnings 50,000 minus 30,000 times 80% is equals to 16,000. So the consolidated retained earnings is 420,000. Pinagpas po yung 404,000 at yung 16,000. Consolidated financial statements. The consolidated statement of comprehensive income and retained earnings and consolidated statement of financial position of Pitt Corporation and State Corporation for the year ended December 31, 2017 are shown below. The amounts are taken from the consolidated column in the working paper in illustration 15-3. So, yung mga amount daw po dito is na makukuha rin siya sa consolidated column sa working paper po. With corporation and subsidiary, consolidated statement of CI and retained earnings, year-end.
Okay. Marie, so what is important for us to see there is the format, no, of the formal consolidated statement of comprehensive income and retained earnings. So there, no, we are seeing the format of the formal report. And as you have said, the figures uh, just copy pasted from the working paper, ano? So pati yung consolidated statement of financial position, ganun din, ano? So this is just a presentation in formal form, the amounts that you have obtained in the consolidation working paper. Okay, so we may skip that and go right away to the next report, the consolidation of partially owned subsidiary. Now, this time is the acquisition other than the book value, no? Other than the book value. So, the next reporter, who was
Opo, wait lang po. Good evening, everyone. I will continue of last report. Pitt Corporation and Subsidiary Consolidated Statement of Financial Position, December 31, 2017. Assets, current assets,
Rose,
cash.
Rose.
Yes po.
We may skip that, ano, kasi
Okay.
sabi ko nga, ano lang eh, copy-paste lang yan para sa ano
Yes
sa
po.
working paper, di ba?
Opo.
So you go straight to the next topic.
Okay po. Consolidation, own subsidiary acquisition at and book value. In some cases, the consideration given of the parent is not equal to the book value of the interest acquired from the subsidiary. As discussed in Chapter 15, the excess between the consideration given and the book value of the interest acquired must be allocated to the specific assets and liabilities of the subsidiary. This allocation must be made in the consolidation paper each time consolidated statements are prepared. In addition, if the allocation relates to assets subject to depreciation or amortization, appropriate entries must be made in the working paper for the depreciation or amortization to reduce consolidated net income accordingly. So, sinasabi rito na ang parent ay hindi equal ang halaga sa book value na nakuha mula sa subsidiary na diniscuss naman sa Chapter 15. Ang labis na pagitan ng consideration given at ang book value na interest na nakuha ay dapat ilaan sa mga particular na pananagutan ng subsidiary. Ang allocation ay dapat gawin sa consolidation paper sa tuwing inihahanda ang pinagsama-samang statements. Ang allocation ang nag-uugnay sa assets na nagpapailalim sa depreciation or amortization. Ang tamang entries ay dapat lamang gawin sa working paper para mabawasan yung depreciation o amortization sa pinagsama-sama nitong kita. The following elimination procedures may be may be used to eliminate intercompany transactions when the investment cost is not equal to the book value of the interest acquired. So, sinasabi nito yung mga sumusunod na procedure ay ginagamit sa pagtanggal na maaaring gamitin upang alisin yung mga transaction sa pagitan ng kumpanya at ng investment cost na hindi katumbas ng book value interest na kailangan. So number one, eliminate intercompany dividends and recognize NCI share of subsidiaries dividends declared o pagtanggal ng mga dividends ng intercompany at pagkilala sa bahagi ng NCI dividends ng subsidiary na ideklara. Two, eliminate equity accounts of subsidiary at date of acquisition against investment account and NCI o pagtanggal ng mga equity account na date of acquisition na pagkuha laban sa investment account at NCI. 3. Allocate excess to the specific assets and liabilities of the subsidiary. The allocation should be in accordance with the principles discussed in Chapter 15. O maglaan na labis sa mga particular na asset at pananagot sa subsidiary na na-allocate na dapat na naaayon sa principle ng Chapter 15. 4. Amortize the allocated excess except goodwill in accordance with accounting for the asset to which it is assigned o pag-amortize na inilaan na labis na maliban sa goodwill na sinusunod lamang ng accounting para sa mga asset kung saan ito itinalaga. 5. Assign income of subsidiary to NCI or magtalaga ng kita ng subsidiary sa NCI. First year after combination -2017, using the data in our previous example, assume that P Company purchases 80% of the common stock of SIG Company on January 2, 2017 for 300,000 pesos. Assume further that on the date of the combination, wait lang po.
All assets and liabilities. All assets and liabilities.
Okay. Of in all combination, all assets and liabilities of C company have fair market values equal to their book values except for the following. So dito, i-assume natin na yung Peter Company ay bumili ng 80% common stock ng C Company noong Enero sa halagang 300,000. So i-assume natin na lahat ng assets at liabilities ng C Company ay may fair market value na equal sa book value at maliban sa mga sumusunod nito ay yung inventory, book value, 60,000. Property and equipment, 300,000 with the equivalent of 360,000. Inventory, fair value, 65,000. Property and equipment, 360,000 with the equivalent of 425,000. In under or over valuation, inventory, -5,000. While in the property and equipment, -60,000 with a total of -65,000. The D&A schedule resulting from the above ownership situation is as follows. Fair value of subsidiary. So, ang gibilang dito sa taas ay yung 300,000 na 80% ng parent price. So, para makuha natin yung NCI at FB, gagawin lang natin ay yung 300,000 ito times ay di-divide sa 80% at ito times naman sa 20% which is total of 75,000. At para naman makuha yung total, ipagpa-plus lang naman yung parent price at NCI at FB which is the 375,000. Next, less book value of net assets acquired. Common stock -S company 200,000 plus retained earnings -S company 100,000 with a total amount of 300,000 na nasa book value na. So, ang gagawin sa interest acquired is ipag-distribute yung 300,000. So, 300,000 times 80% of parent price is equal to 240,000, while the 300,000 times 20% of NCI at FB is equal to 60,000. Next, excess, which is the NCI at FB na 75,000 ay didistribute lang ulit sa parent price at NCI. 75,000 times 80% is equal to 60,000. 75,000 times 20% is equal to 15,000. Next, yung allocation naman is galing lang din dito sa given ng under or over valuation na ikakopy lang dito sa allocation or adjustments. Inventory, negative 5,000. Property and equipment, negative 60,000 is with the total amount of negative 65,000. So, para makuha yung goodwill, yung excess ay pagmaminus lang sa allocation. 75,000 minus 65,000 is equal to 10,000. All the inventory on January 2, 2017 to which the difference relates are sold during 2017. Therefore, none is left in the ending inventory. The property and equipment have a remaining life of 10 years from the date of acquisition and straight line method of depreciation is used. So, sinasabi dito na lahat ng inventory ay nauugnay sa pagkakaiba ng pagbebenta sa panahon noong 2017 at walang tirang ending inventory. Ang property and equipment naman ay may natitirang buhay na 10 years mula sa date of acquisition at ginagamit ang straight line na paraan para naman sa depreciation. For the first year, immediately after the acquisition, the company reported the following: comprehensive income 50,000, dividends paid 30,000. Parent company entries during 2017 under the cost method. Pitt Corporation records the following entries on its books. January 2, debit investment in SIG company 300,000, credit cash 300,000 to record purchase of SIG company stock. December 31, debit cash 24,000, credit dividend income 24,000 to record dividend received from SIG company. So, paano nga ba nakuha yung 24,000? Yung dividends paid ay pagta-times lang sa 80% with a total of 24,000. On December 31, 2017, after posting the above entries, Pitt Corporation's investment in SIG company and dividend income accounts will show balances of 300,000 and 24,000 respectively. Amortization of allocated excess. The amortization of the allocated excess is not recorded in the books of the parent. The amortization is only a working paper entry computed as follows. Ang amortization na inilalaan na labis ay hindi inilalagay sa books of parent dahil ang amortization ay nilalagay lamang sa working paper entry. So, inventory, allocated excess, 5,000, plant and equipment, 60,000, goodwill, 10,000 with a total amount of 75,000. Amortization in 2013, inventory, 5,000, plant and equipment 6,000 with a total amount of 11,000. Amortization in 2014 to 2023, plant and equipment 6,000 with a total amount of 6,000. Note that the allocated excess to inventory is totally amortized at the end of the first year after acquisition. Because the inventory was sold during 2017, thus it is no longer held by SIG company. Therefore, no amortization is needed in the working paper in the future periods. The allocated excess to plant and equipment is amortized over its remaining life of 10 years. Goodwill is not amortized but subject to impairment.
Wait, wait. Rose, sandali, no? Uh, I want you to focus your attention dito sa topic na ito, no? Amortization of allocated expense. Now, itong example na ito, mga 2017 daw no? 2017. So, dapat yung, nakikita niyo yung label na amortization, 2013.
Opo.
Mali yun, no? Dapat yung 2017. 2017. Kasi itong ating illustration, for the year ending 2017, So, mag-amortize ka ng for 2017. Tapos yung susunod na column, 2018 to 2027. Oo.
So, mali po yung book.
May typographical error di yan, Kasi yun na nga, yung libro, siyempre may author yun. Almost every year, nagpapalit sila ng edition, na Paano man kasi nung pagbabago sa laman, tapos ang ginagalaw nila ay yung year. Ay marahil yan hindi nagalaw, hindi na-edit yung year. No? So, yan ang tama, 2017 and then the 2018 to 2023. 9 years ata yan. No?
No.
10 years daw yun eh, 10 years. Hindi, 2027. 2018 to 2027. 10 years daw eh. Diba? Okay. So, continue, no?
So, yun po. Tandaan na yung excess inventory ay ganap na ma-amortize lamang sa katapusan ng unang taon. Dahil nga in-inventory ito na naibenta noong 2017 kaya hindi na ito hawak ng state company. In short, walang amortization na kailangan sa working paper sa mga susunod na panahon. Ang inilalabis sa plant and equipment ay ina-amortize sa natitirang 10 taon dahil sa depreciation. Ang goodwill ay hindi amortize ngunit napapailalim sa impairment na pagbawas sa halaga ng isang asset ng kumpanya. Yun lang po. Thank you.
Okay. So, sa tayo magsisimula. Okay, moderato. Okay, Patricia, you may continue.
So, good evening po. For the continuation po dun sa discussion ni Ms. Kua, ito po yung working paper elimination entries after the first year of operation. So, after 1 year, syempre, mag-ooperate sila ng kanya-kanya. But don't forget, si subsidiary, di niya ginalaw yung libro niya. Yung mga balance ng book value ni subsidiary sa financial statement, yun pa din ang beginning balance niya for future operation. So, makikita nyo na yung dividend income, yung working paper elimination entry, first working paper elimination entry natin. Bakit kailangan nating i-eliminate yung dividend income? Sabi, kapag daw may dividend income na binigay si subsidiary kay parent, problem daw siya. Kasi nakaka-mislead siya sa decision making, kaya tatanggalin yung dividend. Yung 80% na dividend income ay kay parent, then marirecord niya yon as his dividend income. But the question is, tama ba na yung may income sa dalawang company na sa katunayan ay nag-iisa lang sila? So the answer is no. Hindi talaga siya income, pero andun siya naka-record na dividend income ni parent, kaya tatanggalin siya. That's why naka-entry siya dyan sa working paper elimination. Tapos, yung remaining 20% na dividend ay kukunin ng ibang shareholders ni subsidiary. Yun yung non-controlling interest. The next entry is yung retained earnings ni C company. This working paper elimination entries is for the elimination ng equity accounts ni subsidiary. Then recognize natin yung investment ni parent company. So the third elimination entry naman po is yung adjustment na ni-required ni PFRS 3. Yun po yung sa assets revaluation. So, sabi doon na bili na daw yung mga inventory noong 2017. Dun sa report ni Kuwa, undervalued yung mga assets. That's why dun sa fourth elimination entry, yung cost of goods sold, nag-eliminate tayo doon kasi undervalued yung assets natin. That's why magiging undervalued din yung ating cost of goods sold. Kaya nilagyan natin siya ng elimination entry para mapakita natin yung effect nito sa income statement nung company na yon. Then the last entry naman is yung non-controlling interest in controlling interest of subsidiary. Itong entry na to is to recognize yung NCI ni subsidiary adjusted net income for 2017. And yung computation sa baba, to justify lang yung amount na 7.8 kung paano siya nakuha. So, consolidation working paper first year of operation. The working paper for consolidated financial statements for Fleet Corporation and partially owned subsidiary, say company for the year ended December 31, 2017, showing the 5 elimination entries is shown on the next page. So the following are the features of the working paper for the second year of after acquisition. Elimination entry number
Patricia,
1
wait,
po.
wait. Nakakita na naman ako typo error.
Alin po?
Yan the following are the features of the working paper for the first year after acquisition. Ano na naman typographical error si author, ano? Okay.
Okay po.
Ang dinidiscuss natin, first year, di ba?
Opo.
Okay.
So, to continue, yung number 2 elimination entry is para ma-eliminate natin yung total equity accounts ni C company, which is the C subsidiary company, against the investment account ni parent interest and non-controlling interest. The third elimination entry naman is to allocate excess by adjusting the assets ni C company to fair values. The fourth elimination entry naman is to amortize the allocated access. Amortized allocated access means papakita natin yung effect dun sa net income ng company. Yun yung natin kanina nung cost of goods sold. Then the fifth elimination entry naman is to recognize the non-controlling interest in the controlling interest of say company adjusted for amortization and depreciation. The last elimination entry ay NCI of 76,800 can be verified by the following computation. So ito po yung computation kung paano nakuha yung 76,800. So yung net assets ni say company noong January 2, 2017 ay 300,000, tas increase in undistributed earnings, yun yung 50,000 times minus 30,000 equal to 20,000. Then the net assets ni say company noong December 31, 2017 at book value na total niya na ay 320,000. Then unamortized excess 75,000 minus 11,000 ay 64,000. Then the total is net assets at fair value as of December 31, 2017 ni C company ay 384,000. Then yung 384,000 times natin sa 20%, which is the non-controlling interest, yun yung 76,800. For the number 7 naman po, ito yung consolidated controlling interest under the entity concept, and its allocation can also be verified as follows. So ito po yung computation na BIT Corporation controlling interest na 164,000. Dividend income, niles po siya kasi nga hindi naman siya talaga income. Kaya tinanggal po siya. So, BIT Corporation controlling interest from own operations ay total ng 140,000. Say company from controlling interest from own operations. So, may controlling interest sila na 50,000 less yung amortization with a total of 39,000. So, ang consolidated controlling interest na ngayon is 179,000. Then, attributable to non-controlling interest na 78. Then, attributable to parent shareholders, yung total na lalabas. So, yan po.
Now, Patricia, will it that point na magpapakita ka sa amin ng magpapakita ka na naman sa amin ng ano ba to? Working paper, right?
Opo.
Working paper. Okay. So, again, class, we know na dapat mong ipakita yung libro ni Pitt Corporation and Sake Corporation, ano?
Opo. Then, yung adjustments na binili niya.
And then, discuss, present naman yung mga elimination and adjustment entries, no? Ilan lahat yun?
Yes po.
5 ba? 5? All
Wait
in
lang.
all?
1, 2.
Oh, right.
Opo.
Okay. So, dapat yung 5 na yun mag-appear sa
Yes.
proper debit credit columns ng inyong elimination and adjustment columns. Before going into completing the consolidated column, di ba? And
Opo.
after showing the working paper, ano susunod diyan? With presentation na ng formal, final, consolidated statement of comprehensive income, retained earnings, and financial position. No, di ba? Ganun yan, no?
Opo.
Oo. So, pagalingan na lang ng pagkopya sa working paper. So, dapat tamang-tama ang working paper mo. At mahirap naman magkamali ang iyong working paper kung lahat naman ay nagbabalance o nag-agree. Kunyari, total debits or total credit, no? Pero, ganun pa man, it is possible na hindi ka makabalance kasi may pagkakamali somewhere, ano? So, that's it, no? I-finalize mo muna yung working paper before going into the preparation of the final consolidated financial statement. Now, sino to si Google? 8 minutes. Okay, at this point, we insert our, ano ba to? Uh, you may, stop your presentation and we go to the next number of our program, which is, uh, ano yun? Screenshot attendance. Screenshot attendance. So, you open your camera and Roxanne Rosidan, our photographer this evening. You count 1, 2, 3.
Okay na po. 1, 2, 3. Wait
Kita
lang.
ba ako, Rose? Like,
Hindi po. Wait lang po ulit po.
wait. Iyan.
Okay na. 1, 2, 3. Wait lang. Present.
Okay na?
Okay.
Plus, we are not through yet, ano? Magbe-break tayo, and then we will, be having up to, ano bang oras tayo? 9:30. Because we will be listening to the report of Kate. So, break. And then I'll be using our first link, no? To open the meet. So we'll be having a short break, no? As I open another meeting using our uh, first link, no? Okay, have a short break.